Let's bring in David Garrity from GVA Research. He's on the phone right now. So, David, this comes right on the heels of LinkedIn's IPO just 2 weeks ago. What are your initial thoughts as we kind of break down these headlines here?
Yeah, my initial indication here is that Groupon as a business model effectively will be challenged by other companies. I think the likes of Google and others coming into this space. I think that the management at Groupon, by deciding to file so quickly on the heels of LinkedIn, is trying to capitalize on the underwriting window that appears to be open.
Right.
And to the extent that their numbers look strong, at least coming off the S1 for the March quarter, they want to be able to get themselves into the public market before their momentum perhaps starts to fade.
Well, that's interesting. We're all just kind of mulling over the numbers. Remember, Google offered, what, $6 billion for this company. This is an offering, an IPO of $750 million. We're not quite sure exactly how much is in that offering. But does the math make sense to you, considering what Google was offering this company just a short while ago?
No, I'm still going through the numbers as well, and I would just more go back to the first point that we made, that the management at Groupon understands this is a very competitive market. They're seeing the valuations that are being placed on names in the space, and obviously they want to get their money while the getting is good.
Well, David, is this an IPO? If you could, would you want to be a part of it?
I have some doubts with respect to Groupon's business model. To what extent can they actually drive repeat business to clients who actually participate in their offers? So, with respect to Groupon, the cost of customer acquisition for establishments and businesses that participate in what they have to offer, I think, can be very high. And I think only time would tell as to just how successful can Groupon be for its businesses that participate in the program as a way of driving long-term customer relationships.
Hey, David, Matt Miller from down at the Exchange. I'm just wondering what you think about, in LinkedIn, it looks like the investment bankers helped that company leave a lot of money on the table. On the other hand, it's come down substantially from its high. So how do you think Groupon will compare with LinkedIn as far as what they actually get out of this IPO?
I think with Groupon, given the fact that I think that this is something that doesn't necessarily have a long tail to it in terms of building a relationship, it is a business where I think that the value is going to have to be gotten by the current holders fairly quickly. LinkedIn, granted the valuation coming out was very high, and given sort of the pop that you had on the first trading day, factored in a lot of hope going into the future. But it's not on the question that LinkedIn could possibly grow into its valuation, over a 4 to 5 year period of time. Groupon, that question remains very much to be seen. So I think that really the timing here is one where Groupon sees the valuation that LinkedIn got, realizes the competitive nature of the market, and decided to pull the trigger to get into the market before things changed radically.
Well, David, if Groupon was to IPO today or in a couple of weeks here, I mean, what kind of trade do you expect it to spike, just like we saw with LinkedIn?
I think that the bankers involved, and Morgan Stanley was involved in terms of the LinkedIn deal, that the bankers are going to be under a fair amount of pressure to make sure that a better valuation is realized and that there's not as much money left on the table. But I think that that would be to Groupon's detriment over a longer-term period of time. Obviously, they're going to try and get as much money as they can as fast as they can.
Do you expect, David, Facebook to come running to the gate like it seems a lot of other tech and social media companies are, or do they have the size, do they have the scale to sit back and wait and do it at their own leisure?
Yeah, I think more of the latter. I hear that Facebook, in terms of the size of a company, in terms of what they want to get themselves up to, and I think also probably for competitive reasons, that Facebook on their own is probably better suited to remain a private company for longer than might be the case with some of these others.
Hey, David, I want to throw a couple of other numbers out because these headlines continue to cross on Grupo. Everybody, as you know, the new headline here is $750 million IPO for Groupon. David, here's some other numbers. Chris broke down some of them. The March quarter revenue, $644.7 million versus $44.2 million the year before. March quarter loss of 95 cents a share versus EPS of 3 cents a share. Also talking about subscribers at the end of the March quarter, 83.1 million versus 3.4 million. So as we continue to digest all of these numbers, do you like Groupon, though, here as a company?
I think to the extent of looking at the kind of losses that they realized in the March quarter and trying to get a sense as to, from the roadshow and other statements made available, the extent to which those losses are going to continue and what kind of view they have. I'm not really all that excited about going up and paying for a business that's got revenues, and yes, it has subscribers or eyeballs, but doesn't really have bottom line profits. That, I think, is going to work against them.
And, you know,
David,
I just want to, oh, I'm sorry, Matt, go ahead, please.
No, David, I'm just wondering what you think about the environment for tech right now. I mean, the short term, because the market obviously has taken a beating yesterday. Last month was poor. Do you stay away for a little bit during the summer because it's going to be a rough market?
I think that, you know, within tech, you're going to find that the impact of these IPOs is going to draw money away from existing names. So I think that's going to put some pressure on the sector. I think the market as a whole right now is still kind of grappling with the fact that, you know, overall broader economic trends seem to be weakening, and obviously that works against stocks for a while. So I think we're a bit range-bound here.
David, thank you so much. David Garrity talking Groupon. David Garrity from GVA.